Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Bank Nifty didn't open at 1.3, it's opened more minus 1%, 1.07, so 300 points down.
Some of the emerging markets, they have been disastrous performers pretty much last 2-3 years now.
We have the Nifty, which is down around 0.5%, the Bank Nifty, which is down around 1%.
The market is off the lows and how we're at about 11,394, which means we're about 50 points, 55 points off the lows.
On the way down, of course, BPCL, HPCL, IOC were the biggest loser. There's a bit of a double dichotomy or double whammy here. In the sense, crude prices are up, and you have dollar-rupee equation also playing like that, so 6% down.
Currency jitters hit Dalal Street in line with global peers. Sensex slips more than 200 points. Nifty closes below 11,400. Reliance is the biggest index loser.
The rupee joins the emerging market currencies rout on continued turmoil in Turkey. It tanks to a lifetime low of 69.62 against the US dollar. The Turkish lira retraces some of its earlier losses after steps by the Turkish central bank to improve liquidity.
Banks and financial stocks are the worst performers. PSU Bank Index slips over 3%, led by State Bank of India, and PNB HDFC Bank slips over 1% after Deputy Managing Director Paresh Suktankar resigns. Aditya Puri assuages investor concerns.
Tech and pharmaceutical stocks rise, helped by a falling rupee. The Nifty IT index gains over 1%. The pharmaceutical index up over 0.5% in trade today.
And oil refinery companies fall over 5% as crude remains firm and the fall in the rupee threatens to push up their raw material costs. Well, those were the top 5 headlines from Dalal Street today. What was feared to be a chaotic day. Hello and welcome to Markets Today Talk Back, the show where we tell you everything that happened in the 6 hours of trading in just 5 headlines. I'm Lata Venkatesh. With me, Prashant Nair. That was one hell of a day.
One hell of a day. Not just the stock market, but the rupee as well. I mean, I think that was the head and the stock market was in a way the tail. Over the next 30 minutes, as Lata pointed out, we will talk about what really went down in terms of the market. Of course, we'll also tell you the 5 stories which kind of defined the day. We take your questions as always, so keep them coming. Our experts, Ashwini Gujral on the charts, and we'll also have Dipin Mehta, who will be joining in to take your questions. Gentlemen, thanks very much, both of you, for being with us here as always. But before we start the Q&A session, let's quickly take stock of what really happened in trade today. It was never really a calm start, especially if you look at Forex, Lata, today.
Yes, the overnight or over the weekend crash of the lira was preparing us for something bad. The only thing that could have worked in our favor is that we had already fallen in late trade on Friday. And the rupee is backed by very strong Indian macros. So that's what we thought will work for us. But this is how the contagion went. The lira crashed because of high inflation in that country and the central bank not hiking rates enough. It led to a situation where either they have to push up rates considerably or go to the IMF because there would be a substantial dollar outflow. That led to falling of European stocks and European banks in particular who are exposed to Turkey. The euro went down and the dollar went up. When the dollar goes up, matching currency falls happens in the emerging markets. So that was the chain of contagion, if you please. In a way, the rupee was the worst performing EM currency. If you take away Turkey itself and South Africa, which is again a basket case like Turkey. But among the others, Indonesian rupee fell only 0.8 and the others fell between 0.2 and 0.25. So in a sense, we have a window of vulnerability, and that fall in the Indian rupee was reflected in the shares as well. Let's remember, the rupee has had a very long stint of stability. We were 69 in 2013, we are 69 now. That's an amazing stability. And the stocks are reasonably well priced. We are among the better performing market. So whether you look at rupee or at stocks, we were ripe for profit taking. So any vulnerability was there also because of the overpriced nature. And there was no prizes for guessing what would do well and what would do badly. Banks always do badly when the currency does badly. IT and pharma always do well. And that's how the day panned out. But some more granularity on stock performance?
I mean, pretty much what you said, Lata. So PSU Bank's top loser in terms of index. Energy stocks were lower. big importer, depreciating rupee, not really good news. Real estate stocks were lower. IT and pharma, I mean, held out, and they were the top gainers. So, I mean, the stocks in the IT and pharma space, Tech Mahindra, HCL, Infosys, Sun Pharma, Aurobindo, Dr. Reddy's. So 3 IT, 3 pharma names. I'm just sticking to large caps. I'll get to mid caps there in just a bit. HPCL, IOC, ONGC, Reliance was down about 1.33%. State Bank of India, Yes Bank, Bank of Baroda from the PSU Bank space, which were lower. The broader pain, and mid-caps and small caps have had a stellar run from the lows. The recovery has been to the tune of almost 8.5%. They gave back about 1% today. Bajaj Electric, some of them have specific news slow results, but there was general selling as well. So Sun TV, India Cements, Cadila, Shriram Transport, Indiabulls Housing, Future Retail, NBCC. I mean, a couple of NBFCs here which lost today as well. The winners, Apollo Hospitals, results came on Friday. Big reaction, 12% gains. Jet, again, it's lost quite a bit. And I think it's 1/3 of the value it was even at the beginning of the year. Still under 300. United Breweries, Page Industries was higher. Great franchise, maybe pricing power. Global Spirits was up big time, big volumes. And you look at mid-cap tech, Mindtree, Cyient, Hexaware, which all did reasonably well in an otherwise down and out market. Lata.
Yep. Well, when the currency, weakness in the currency is expected to push up inflation, and therefore interest rates today, the yields went to 7.82 from the overnight, over the weekend 7.75. So that explains why the banks and the interest rate sensitives were not happy today. But let's find out what our guests are making of the markets. Ashwini, first to you, can you assess the day for us and what it is telling you about future trends in the Nifty and the Nifty Bank?
Well, today a new variable has come in, and which is the currency. Now, because of this currency depreciation, I think there's an inflation scare, the bond yields are higher, etc. So, you know, that comes at a time when the Bank Nifty is sitting on a 2,000-point rally. That way, you know, the financials, the rate sensitives, they could have some downside, and basically it becomes a good reason for a correction. So that way, possibly Nifty has a couple of 100 points downside, and similarly, Bank Nifty could come off 500 to 600 points out there. So for the next few days, you should be lower. And the way, you know, the rupee has shaped up, it's come out of a 2-3 month consolidation. So that looks poised for 71, 71.50. So that way, you know, IT will probably be resilient, and the rate sensitives will possibly move down.
Okay. Well, just as a follow-up, so are 11,000 and 27,000 under threat?
See, those are the 50-day moving averages. You know, they come in if things get very bad, which means 73, 74 on currency, and this global turmoil on EM currencies continue. But at least for starters, it should be first the 20-day moving averages, which is the 11,200, 250 zone. And similarly on Bank Nifty, possibly, you know, say 27,500 thereabouts.
Okay, Ashwini, thanks very much for that. To the second headline, to the second story of the day, the spotlight remained on the Turkish lira as the currency broke the 7 level in thin Asian liquidity conditions, although it retraced some losses after steps by the Turkish central bank to improve liquidity. Remember, the collapse of the Turkish lira and the contagion fears saw a hunt for long dollar positions across the board. The worst performing Asian currency was by far the Indian rupee, tanked to a lifetime low against the US dollar. Lata, I mean, broadly speaking, the rupee has hit a low, but one doesn't sense really any panic in that sense. So people have been talking about, you know, it'll go to 70, 72. So it's finally happening. Seems people are on the right side this time.
Now, in my book, 69 is the wrong number, and 70 plus, whatever, 71 or thereabouts, would be a better value for the economy itself. An ultra-strong currency always leads to what you call the Dutch disease, makes imports cheaper and domestic industry struggles. But that is, I'm not here value judging. I just told you the connect, that, you know, the rupee weakened because of the euro impact on the dollar. Euro is falling because of exposure to lira, and dollar index nobody expected would go north of 96.4. It was almost 96.5. That was not a level. So at that, algo trade immediately works, kicks in, and it indicates a sell on EMs. Now, the rupee has its window of vulnerability, which is why today it's the worst performing currency. It's not a bad performing currency, but it is the worst in relative terms because, you know, it had an unusual stint of stability and it has a current account deficit, which is, you know, a bit worrisome. And considering that crude didn't fall today, you know, when there is so much of global equity weakness, it should have pushed the crude down. But crude is 72.84, almost $73. And therefore, it is a double whammy that would obviously hurt the Indian rupee. And the current account deficit is genuinely a worry. So the weakness was always waiting to happen. What basically happens is not that there is an outflow of dollars. I mean, even on Friday, what was it, 500 crores or thereabouts? What happens is people buy hedges. So you're buying the dollar and that creates the buying pressure and weakens the currency. I think for the Indian market, the worst thing that happened was the RBI was not there. See, until now, they used to seeing the RBI at 69.10 or 69.20. Today, it was there maybe at 69.60, people told us, but they were not selling dollars in sackfuls. Apparently, it was some bit of an order. And then the rupee waffled between 69.50 and 60. And then they suddenly disappeared when it came, or rather, they were not there at 69.60, 69.70, 69.80. And that led to people, you know, importers, for instance, near-term importers panicking and going to buy, and exporters exactly at that time refusing to sell because now it looks like the Reserve Bank is not defending any level. It's not panic at all. There were people, even traders, telling us that there were lots of relative trades being played because the expectation was the Indonesian currency or the won will fall more. So there was a long rupee short IDR, long rupee short won trades also that some people would have taken. So not worrisome at all. But, you know, 70 on the board and suddenly things can suddenly go out of control. That's what would be worrying a lot of rupee traders. But otherwise, the Reserve Bank is so much in control of the macros that at the moment, this is a welcome depreciation, I would think.
You know, let's quickly get some technical levels on the rupee as well. Ashwini, I mean, if you track it, any thoughts on the currency itself, the dollar rupee?
Yeah, rupee, you know, for the last 3 months, it was between this 68-69 zone. And today, you know, it's broken out with such force. It's almost a rupee move on the rupee. And the next target here basically is closer to 71, 71.50. It's like an expansion which has started on the rupee. So if you want, this is the best looking chart out of Nifty, Bank Nifty, rupee, etc. So chances are that the strength of this move should not be underestimated.
Not underestimated. Now, that's important. Deepan, as a currency, as a stock trader, how worried should you be at all because of the rupee?
See, I think if it goes into a free fall, then it is a cause for concern. Otherwise, it does create an opportunity, as we saw in the software companies rallying the way they are. And so far, I think FI flows have been pretty stable, and that's the more important indicator than the actual rupee movement. And if we have accelerated sales coming in from the FIs because of currency fears, then that is a problem which the market cannot really handle in a proper manner, and we may see deeper corrections. So I think these sort of minor corrections, and so long as FIs remain interested in Indian markets because of valuation, because of business fundamentals improving for some of the export-oriented businesses, so long as those trends are intact, I think we are fine. But yes, I think you need to keep an eye on the rupee all the time now. I think it is getting into center stage mode. And if there was some major issue over there, rupee fall into 73, 74 or so, then there is no way this market can, you know, defend the earlier support levels. It will have to correct even more because of FI selling.
Okay. Well, the third headline for the day. With that, Deepan, we'll have more questions for you on this. Banks and financial stocks were the top drags in today's market. PSU Bank Index was down over 3%, led by the likes of State Bank of India and PNB, which were both down 3% each. Remember, State Bank reported a wider, well, I wouldn't say wider than expected, but a fairly wide quarterly loss for the first quarter on Friday. Other stocks that were weak were the HDFC Twins. HDFC Bank slipped over 1%, and the lender's Deputy Managing Director, Paresh Suktankar, stepped down, although MD and CEO Aditya Puri assuaged investor concerns on continuity in decision making. He said that the board will decide on the replacement of Suktankar, but the post of Deputy Managing Director may not be there any longer. Let's listen to Puri, and we have lots of questions.
Do we have the depth of management? Yes. Will this affect the normal course of functioning? I don't think so. Is it a loss of a good resource? Yes. The board and I will take appropriate decisions within the next 10 to 15 days, which will have the right people in place.
Okay, that's Aditya Puri at HDFC Bank saying, well, he doesn't see any impact of Mr. Suktankar leaving the bank. Time for a question. This is not an HDFC Bank, but an HDFC. We have Raj Gopal Rao from Telangana on the line with us with the question on HDFC. He's got 3,500 shares. His purchase price is 1725 rupees. And he basically wants to know what to do. I mean, he's a long-term investor, hold or sell. Deepan, what would your advice be? Price at about 1950.
Okay, I think there with us on the line.
Yeah.
Mr. Rao, you can ask your question. The expert is listening.
Thank you, ma'am. Thank you. Hello?
Yeah, go ahead. Please ask.
Hello?
Hello, yeah, go ahead.
Sir, good evening, good afternoon. Hello?
Yes, go ahead.
Go on.
Sir, good afternoon to you. I'm speaking from Hyderabad. Hello?
Yeah, good afternoon, sir. Please tell us your question.
I'm holding HDFC shares, 3,500 shares, bought at 1725, and I want to know the long-term process, maybe 3 to 6 months or 1 year, maybe, on this HDFC. What do you think about that?
Okay, fair enough, Mr. Rao. Let's take this to our expert, Deepan Mehta is with us. Deepan, what would you tell him? He's already in the money.
I think it's best to remain invested. Next 3 to 6 months look quite interesting for HDFC, and past couple of quarters the numbers have been coming through better than what Street is expecting. The core housing finance business is certainly showing improved trends over there, and it's got the best in class balance sheet and the lowest NPAs in its peer group. So there are many positives going for HDFC, and also they benefit from low cost and entry-level housing that's picking up well for them, and they're very strong in that segment. So I would say it's best to remain invested for a few more months in HDFC. I think you'll get a better appreciation even from these levels. At least it will be an outperformer versus the Sensex and the Nifty.
Okay.
This here on Markets Today Talk Back. We've been wrapping up the day's events for you. Deepan Mehta and Ashwini Gujral are with us to decode the day's trading action and answer all your stock questions. We are through with 3 of the top 5 headlines. So here's the 4th one. Technology and pharmaceutical stocks rose amid a fresh fall in the Indian rupee. The Nifty IT index gained over 1%, led by the likes of Tech Mahindra, HCL, Tech Infosys and others. We also had the pharmaceutical index, which was up over 0.5%, backed by stocks like Dr. Reddy's, Sun Pharma, Aurobindo and others. In fact, market expert Saurabh Mukherjee feels, actually, he told us this when we spoke with him earlier in the day, that a fall in the rupee could actually trigger a fresh leg higher in these sectors, pharma specifically and IT as well. Listen in.
Pharma, I think if the rupee doesn't devalue itself for 5 years, which is broadly the case, right? The entire length of this rally, the rupee has been at this 66, 67, 68. Obviously, that's a challenge for pharma companies. But as we are seeing from a bulging current account deficit, I think a devaluation of the rupee is long overdue. And whilst I think the RBI is doing its best to keep the rupee at 70 or below, I think they're sort of dealing with sort of rising level of water. I think the rupee will breach 70 at some stage in the next 12 months, and pharma should be a big beneficiary.
Okay, pharma should be a beneficiary. We have a question from Pankaj Kumar, who is on the phone line with us from Himachal Pradesh. Pankaj ji, kahiye, what is your question? It's a question on Lupin.
सर मेरा क्वेश्चन ये है कि मैं कब तक इसको होल्ड कर सकता हूँ ताकि मैं अच्छे प्रॉफिट में बन सकूँ इसमें।
अच्छा, ये तो आपका खरीदी भाव तो 1900 है और काफी दूर है। Well, what is your sense, Deepan?
Not 1900, ma'am.
No? Okay. What is your purchase price? क्या है आपका?
900.
Oh, sorry. Then that's a mistake. Purchase price is 900. तो ये fall शुरू होने के पहले आपने शायद खरीदा है और ये ओके 100 रुपये का फॉल है आपका। Deepan, what would you tell him? The pharmaceutical shares have started looking up. So he should wait. He will get back his purchase price of 900 in Lupin.
I think it's difficult to give a call over there, but it's better to start selling gradually at every rise and try and exit out of the counter. We are not completely confident of the medium to long-term prospects of Lupin. The numbers also are not all that exciting. They missed analyst estimates, and there's still a lot of pressure as far as US market is concerned. And I feel that the investor has perhaps gone to the wrong stock. He may have bought it recently or so. There are far better prospects elsewhere, I think, in the consumption-oriented themes which must be looked at and invested upon. So I think that one should look at exiting out of this company at the appropriate price. Maybe if you get a 5-10% type of a move because of the rupee depreciating or for whatever other reasons, then that's a good opportunity to exit out of Lupin. It's not a long-term holding, that's for sure.
And what can he get into?
Well, I think some of the consumption-related themes, especially within auto, Maruti, Eicher looks good. Then private sector banks also look quite interesting unless you don't have adequate exposure over there. There is no way you're going to be able to beat the Sensex or the Nifty. And then there are appliance companies, building material companies. I think all of these should do pretty well. Paint companies came out of the good set of numbers. So did auto ancillary, and some of the NBFCs also, especially consumer-oriented NBFCs, came out with good set of numbers. So there are many choices for businesses which are domestic oriented rather than the pharmaceutical business, which is completely kind of full of uncertainty as far as pricing and government regulation is concerned.
Okay. पंकज जी, एक्सपर्ट का मानना है कि आपको हर एक चढ़ाव में ये स्टॉक को उतारते रहना चाहिए. Book your loss if there is any, and get into consumption oriented stocks, paint stocks, some NBFC stocks जो consumers को loan देते हैं, private banks as well. But he doesn't think Lupin is a very good long-term bet. तो आप हर rise में बेचते जाइए. That is the advice.
Okay, so that is the advice coming in on Lupin. We move on to the last headline of the day. Oil refinery companies today tumbled in trade as crude oil prices remain firm, and of course there was the fall of the rupee to boot as well. It of course will, weakening rupee will make the imports of oil more costlier. That's essentially raw material for refining companies. BPCL, HPCL saw a decline of 5% each, while IOC was down more than 3%. We got a question now. Abhinav Prasoon has tweeted to us. He wants to know whether he should put money into HPCL or IOC. Seems like he's made up his mind to put money in the sector. Wants to know whether HPCL or IOC is the right stock to buy. Deepan, what would you tell him?
I think neither of them. There's no need for investors to be invested in oil marketing companies. And it's not that you have to buy the oil marketing companies. You still want to play the oil sector, then Reliance may offer better returns than the oil marketing companies. There's a high degree of volatility in their earnings, and you know how much government indifference is there as far as pricing of products are concerned. And overall, I think expansion plans also in terms of volume growth are not that too exciting for oil marketing companies. So it's a complete avoid from our perspective.
All right. Deepan, thank you very much for joining us, Ashwini as well, and answering the questions of all our guests. Well, it's a day when the Nifty fell off from the 11,400 mark, and it's a day when the rupee touched fresh all-time lows. Interesting day and interesting times ahead. We'll watch out for you on Markets Today Talkback.